We're joined now by Schwab's chief investment strategist, Ann Sonders. It's good to see you.
You too.
We're not that far away from new highs, and you can thank the growth factor for getting us there, can't you?
Yeah, so that's been interesting. Momentum has certainly picked up as a factor doing well, and that's not surprising when you get these kind of rip higher rallies. But aside from that, which isn't really a fundamental factor, it's more like a concept. It just means that stocks that have been working continue to work. But it's interesting that also kind of up the ranking on the leaderboard are those more growth-oriented factors, both historical growth and prospective growth, so positive earnings revision. So it clearly tells you that there's still a bit of a quality bias in terms of what's working, with an emphasis a little bit less on valuation, but more on can you sustain that earnings growth? Are you in a position, either because of immunity to tariffs or whatever the reason, that you've got that positive outlook from an earnings perspective and an otherwise murky earnings outlook more broadly?
What do you think this move is about today? Is it about the Middle East not going to be as bad as investors feared just a couple of days ago? Is it about Chair Powell being firm but flexible on what the Fed might do in the months ahead?
So I've been in this business, Scott, for almost 40 years, and one of my mantras that I express quite often is that better or worse often matters more than good or bad. It's relative to expectations. It's that direction of travel. It's inflection points. And we've really seen that come into play in the market going all the way back to early April, when we had the, week apart tariff shockers. April 2nd, the announcement of the reciprocal tariffs, the implosion in the market, and then the delay. Still looking at a 15% average effective tariff rate in place right now, but it was that better than worst case scenario in that first week in April that kicked in. Same thing has happened as it relates to the conflict in the Middle East. Concerns that obviously developed over the weekend, and the spike we saw in oil prices, and what the futures were signaling on Sunday night, when things were not as bad as what was expected. We weren't seeing an escalation. That was enough to move the market higher. And I still think the pain trade is higher. So we have to really think about not just trying to gauge the news and the announcements from a policy perspective, geopolitics, tariffs, but also what the setup is for the market as to whether that means you have more potential upside if you get that slightly better news, or maybe the risk of some downside if you get a negative catalyst. That setup is really important.
I still feel like not everybody is participating in all of this from an institutional standpoint, right. And that's a catalyst in and of itself when the writing gets on the wall that we're not only going to hit new highs, but we have the possibility of going even higher than that. There goes your next leg of this rally, if there is to be one.
And this has been such a fascinating move up off the lows in early April, because retail traders' fingerprints are all over this. And notice I said retail traders and not individual investors. I'm specifically talking about that category that kind of came out of the COVID era, the shorter term focus. They have very much a buy the dip mentality. And you saw and have seen those fingerprints because it's areas like retail favorites and negative, earnings in the tech space that has done well, the meme stocks that have done well. And then more recently in the rally, you saw the heavily shorted names perform well. And that may suggest that buy the dip, which worked on the part of the retail traders, forced some rethinking of positioning on the part of institutions. So you saw it in the short covering. Institutions are still not positioned aggressively risk on, which does suggest that maybe the pain trade is still higher from an institutional positioning perspective. But when we get there, and assuming you still have, rampant enthusiasm on the part of the retail trader, then the setup becomes one that maybe is subject to some downside if you get a negative catalyst.